Facebook. What's up? It's Ty here at Credit Suite. So today we're going to be talking about business loans. Today we're going to be talking about how to get business loans of rates of 5% and less. I mean, we're going to be talking about 1 and 2% interest rate loans today, even lower than you'll even see at a conventional bank loan, an SBA loan, without needing cash flow or collateral. So look, more than likely you've seen a lot of business loans advertised recently, and they're almost all what we call cash flow based financing. And we've talked about this a couple live streams ago, but cash flow based financing is more expensive money. It's fast and easy money. It's fantastic if you have consistent cash flow, but it's more expensive money. Then we talked last week about unsecured financing if you only have good personal credit. But here's the thing. What if you don't? What if you don't have cash flow yet? What if you're a startup? What if you are in the newer stage of your business where you don't have a lot of verifiable cash flow? What if you don't have good personal credit? What if you don't have a guarantor that has good personal credit? Can you still get a loan? You absolutely can. As a matter of fact, not only can you get one loan, we're going to talk about like 10 or 15 different types of loans today that you can get even if you have no cash flow, and even if you do not have good credit, even if you have horrible personal credit, you could still get the financing we're going to talk about today. And here's the best part. The best part, again, is that the rates are lowest on this financing, lower than anything else that exists. As a matter of fact, the rates on this financing are almost all 1 to 5%. Some of it's a little bit higher. So how can you get financing today without cash flow, without credit? That's what we're going to dive into. So let me go to the whiteboard here and catch you up, show you where we are. So what we've talked about here is 3 different types of ways you can get financing when you can't get money at the big banks. We talked about how to get financing only based on your cash flow. If you have revenue of $10,000 a month or more, you can get revenue financing. And if you have if you have tax returns, good personal credit tax returns, you can get private money and alternative SBA. Oliver, what's up, man? Thank you for coming. I appreciate you letting me share. Then last week we talked about this, the second C in lending, what I call the 3 C's of lending: cash flow, credit, collateral. Hey Elaine, welcome to the live stream. So this was all based on personal credit. If you have good personal credit, you can get what we talked about last week and get up to 150 grand in unsecured financing. It only takes a few weeks to get, not as fast as cash flow financing, but again, you can't beat 0% and up to 150 grand. Today we talk about that third C, right? And we talk about collateral-based financing. Now, remember, what I like about this 3 C's formula is you only need one of these and you don't need the other 2 to get approved. Remember, at the big banks, at the big conventional banks like Wells Fargo, Bank of America, they're fantastic if you do have all 3. But a lot of people don't have cash flow verifiable per their tax returns, really good credit, and collateral. Most people don't have all 3. So the thing to keep in mind is that you can get approved only with one of these. You don't need all 3. And the one we're going to talk a lot more about today is collateral-based financing. And I'm going to give you a lot of different ways you can get financing, even if you don't have good personal credit, even if you have no cash flow, even as a startup, even with 350 credit scores. What I'm going to show you today will work for you. So collateral-based financing basically looks like this. What they're doing is, all they're doing is taking one type of collateral you may have. They're using that as the basis of offering you a business loan, and that's all they care about. They don't care about your cash flow. They don't care about your credit. Thank you guys for the loves. Thank you for the likes, and thank you for the shares. It means a lot. I appreciate it. Lets me know I'm on the right track. So they don't care about your credit. They don't care about your cash flow. All they care about is the collateral you have. They use the collateral as leverage for the financing, and they lend you money based on that collateral only. Now here's the kicker. Here's the best part. The best part of this is that since the collateral is something they could take back if you default, then their risk is really much lower than on anything else. Remember, the other 2 types of financing here are inherently higher risk, because with this, they're gambling. They're betting on the fact that your current revenues will either stay the same or grow over time. And they're lending you money based only on that gamble. Then remember, with unsecured financing, it's unsecured. There's no collateral. They're taking a gamble that based on the fact that you've recently paid your bills on time, that you can qualify. Collateral-based financing is a much smaller gamble for them, because if you default, They just take your collateral. And even though your collateral might not cover the total amount you owe them, it will cover a large percentage of what you borrow. So the risk is much smaller, which means rates are much smaller, which also means that you don't need the other things like cash flow or credit to get approved. So what kind of collateral can you have? A lot. And we'll talk about all of them individually. So the first type of collateral-based financing I want to talk about is what's called 401k financing. I call it that, or securities-based financing. If you have a 401k, an IRA, stocks, or bonds, you can qualify. Now remember, even if you don't have one of these, you still might have somebody that invest in your business that does. So let me give you an example. Well, I'll tell you the real way it lays down. 401k financing is most popular for partners, people that have partners, multiple people that want to invest in a business, and they can all vest part of their 401ks and they can all have cash invested. James, thank you very much for the good info. I appreciate the comments, appreciate the engagement, appreciate the likes and the loves and the shares. I can't tell you how much that means to me. It lets me know again that I'm on the right track here. So with 401k, IRA, and stocks, it's most popular with people that are investing money into a business. So let's say I've got two buddies and we're like, hey man, we should sell widgets because we should sell drones because drones are hot right now. And the other guys are like, yeah, drones are hot. Let's sell drones. And then we're all like, okay, we're going to need $15,000 to get started. I got 5 in my 401k plus you got 5, you got 5. Let's all take it and use this 401k program. So there's a lot of ways you can use this, but let me show you the strengths and benefits of this type. So first of all, you get 5% rates with this financing. Now, we just did a loan just this week we got approved. I can't think about the approval amount, but it was for over $200,000 that the guy got in 401k financing. Let me actually we had a guy that owns a bar, and bars are kind of viewed as high risks as conventional banks. He wanted $25,000. He went to his bank. They denied him. Not surprising. It's a bar. Banks don't like bars. So he came to us. We got him 401k financing for $750,000 because that was what was in his 401k. So imagine not being able to get 25 grand and being able to get 750,000. It's crazy, but that's what 401k financing does. Now, a lot of people don't take the full amount they're approved for because they're approved for so much money, and sometimes they don't want to take that full amount of money. You don't have to, but just know whatever you the rates are about 5% on this kind of financing. Now, if it's a 401k you're leveraging or an IRA, these two guys right here, you can get 100% of the value of what's in them that's rollable. So remember, part of your 401k still might be vested with your current employer. If that's the case, your current employer won't let you use this or move it anywhere else. But whatever's not vested with a current employer, you could borrow against 100% of it and get financing. You can also borrow as much as 90% against stocks and bonds. So you get a 5% rate, 100% of what's in a 401k, 90% of the stocks, and then ultimately you're playing about prime plus 2% is what it comes out to. But what we've seen is 5% fixed rate loans, usually I think for like 3 years, 5 years. You can even get credit lines with this as well. What you need to know about this kind of financing. First of all, you still earn all the interest and returns. So if you're earning interest on your 401k and stocks, you do the same thing. So with stocks, you still get to keep your stocks vested where they are. You still get the same interest, the same returns, all those type of things. You're just leveraging the stocks. So if you default, they're going to take the stocks. It's as simple as that. With 401k financing, think of it like this. Your 401k is just an investment in other companies. Well, with 401k financing, you're basically just in using and shifting the investment to your business instead of other people's business. Does this make sense for you? I don't know. You know, it comes down to the fact that if you want to keep your 401k as a 401k, keep it as a 401k. It might make sense. Remember, this only really becomes an issue if you default and they take the 401k or the stocks. If not, you're still earning the interest, you're still getting the returns, you're still doing everything with them you're doing now. It's just they become in jeopardy if you default on the financing. So if you don't default default on the financing, then hey, Ricardo, welcome to the live stream. If you don't default on the financing, then it's a good way to go, because instead of investing in other companies, you can take the money and invest it into your business and use that to get a much greater return than you would a normal stock, right? Think about it. What kind of return do you get on a normal stock investing into another company? Well, what kind of multiple or return can you get investing in your own company? Okay, and this is how I am personally. I don't take a bunch of money out of our business at all. I leave it all in. I keep it in because I'm going to get a greater multiple by the business growing at a higher percentage than I ever would putting that money into securities or stocks. So I choose to I still invest, but I still choose to leave the majority of money in the business and let the business grow at a faster multiple, because nothing is going to gain you a greater return in almost all cases than your business will with growth if you're doing it the right way. Now, Oliver says, I have a rental property. This can be considered collateral as well. And do I let them know it's a rental property as well? We'll talk about that. But the answer to your question is using a property as collateral for a debt is by definition a mortgage. So if it's one residential unit, you could use it as collateral for a residential mortgage, not necessarily for a business loan. If it's commercial property or a multi-unit family, then you can use that as collateral for a business loan. There are some sources out there that with good credit will let you use properties as collateral to offset the risk and get credit lines and loans. So yes, it is. If you do have good credit, there is a financing option available for you based on that. Gotcha. Cool. Thank you. So 401k, IRA, stocks, bonds, do you have one? Do you have somebody that's interested in investing in your company that has one? If so, you can get rates of 5%, 90 to 100% financing, 90% of what's in stocks and bonds, 100% of what's in a 401k or IRA, still earn the interest, still earn the returns, and get the benefit of a low rate financing, regardless of credit, regardless of cash flow. So another kind of financing is called account receivable financing. Now with AR financing, you can basically get about 80%. You can get hey Christine, welcome to the stream. I called you earlier, by the way, as well. Account receivable financing, you can basically get 80% of your account receivables advanced to you within 24 hours. So let me give you an example, a real example. A buddy of mine does the plastic mugs they sell at Busch Gardens. I always use this example because I think it's a great one. And so Busch Gardens comes in with big orders. Like they order 10,000 of those plastic mugs that they charge you like $5 or $10 for, right? Hey, what's up, Jess? Welcome to the stream. So he produces those. Here's the problem. When Busch Gardens gives him an order, they give him an order for 10,000 mugs. He has to use his equipment, use his staff, produce the product, deliver it to Busch Gardens, and then Busch Gardens might wait 30 to 90 days to pay him. So imagine him basically paying the cost to deliver the product and then waiting months to get paid. It creates cash flow issues. So in these kind of cases where you have account receivables with other businesses or the government, you can basically get those advanced to you the next day without waiting to months. So let's say, for example, you're a doctor's office. You deal with Medicare and Medicaid and insurance, and you wait weeks or months to get paid. Well, with AR financing, you could basically use those as collateral, get 80% of whatever the invoice is advanced to you the next day. The lending source collects all the money from the actual source. So in this case with Busch Gardens, they collect the money from Busch Gardens, and then when they get paid, they pay you the other 20% of the receivables minus whatever their fee is. And here's the best part. Their fee on this kind of program is a discount of only about 1 or 2%. So with AR financing, you're paying about a 1.25% to 3% discount rate. Okay, you can get loans up to $20 million. You can get 80% advanced immediately, and they just need to be business or government receivables. Now that kind of ties in with purchase order financing as well. So the difference is, let's say with purchase order financing that you're an embroiderer and you get a big order for a bunch of embroidered shirts like these that have our logo, right? And so you get a big order, but you got to buy the shirts first before you can embroider them. And that costs you money. And let's say you don't want or don't have the money to buy all the physical shirts to embroider to deliver on the order. Well, then you can go to a lender and get a letter of credit where they'll go to the supplier of the shirts and they'll say, you put the shirts on the boat and ship them over here from China. We will pay you. Here's our letter of credit stating we will pay as soon as we get proof that it's on its way. Okay. And thank you all very much. That's awesome. I just got Jenny and 6 others that said shared this. So thank you all. I really appreciate you sharing it. So we go to the supplier, we tell them, you put the shirts on the boat, we're going to pay. The lender then pays 95% of the purchase order to in this example, the shirt person that produces the shirts. You get the shirts, you embroider the shirts, and then you get paid, and you pay the lender off. That's how purchase order financing works. So different than account receivable financing by far, right? Because account receivable financing, you get the receivable, and you get paid on the receivable. Purchase order financing, you're getting the money to buy the supplies you need to basically produce the product. So it's way different. So with purchase order financing, you can get 95% of what is in here as the actual purchase order, and it works really well, whatever your purchase order is. Now, another type of financing is, and that's a 1 to 4% rate is what you'll pay, and it's a line of credit is basically how that works with purchase order financing. So inventory financing is another great type of financing. Now, if you have a lot of inventory, you need to have about $1 million worth of inventory, then you can borrow and get a line of credit of 50% of what that inventory is. It's a line of credit. The interest rates are pretty good, 2% plus rates, depending on risk, and you get about $500,000 as the starting point. So basically, you get 50% of your inventory advanced to you in a line of credit. Here's why I like this product. It's really hard to get lines of credit. I mean true lines of credit, not credit cards that people say are lines of credit when they're not. It's really hard to get a real line of credit when you have credit problems. This type of financing, you can get a legitimate $500,000 credit line no matter how bad your personal credit is. It's one of few type of financing where you can get a big credit line even with bad credit. They don't care about credit. They don't care about cash flow on any of this kind of financing that I'm outlining. All you need is a lot of inventory. So if you have a lot of inventory or buying a lot of inventory, so let's say you know to run your business, you know you need a lot of inventory, and that's really going to strap you cash flow wise. Well, buy the inventory, then use this kind of financing to get a working line of credit against the inventory, low rate and $500,000. That's pretty freaking stellar. But the kicker, you got to have a lot of inventory to get approved. They really want, they'll give you 50% of whatever your inventory is. At $500,000 is where this program starts. So you need about $1 million in inventory. So it really only works with big players. If you fit that category, it's a good product. So equipment financing, a lot of options here. A few main different kind of options, and I'll kind of go through some of those with you right now. Dive in. So there's 3 types of equipment loans. 3. Well, my Sharpie looks like it shows us 4. 3 types of business loans, okay, that are equipment based. Number 1, equipment financing. You can get it as a startup. So I've got friends that I'm helping, 2 different sets of friends that I'm helping right now to get financing to buy new equipment. They're both in the medical field. They need huge x-ray machines and big pieces of medical equipment. So we're getting them the financing they need to buy equipment. You can get it as a startup. You can get it even with challenge credit. We've seen this financing down the mid 500 scores. They'll do it. And you can get approved with as little down as first and last month's payment. How much is that? Well, how much equipment are you borrowing against? You know, that's what determines it. But with only first and last month's payment, you can get approved. Second type, equipment leasing. Equipment leasing is cheaper rates than financing, but you got to be in business 1 year to get approved. So equipment leasing is a great way to go if you need equipment, you've been in business a year, the credit requirements are a little bit more stringent, but you get better rates than equipment financing. And remember, with all of this I'm talking to you about, the interest is 100% tax deductible. So It doesn't matter what you pay if you can afford it, because it all comes back as a write-off at the end of the year. The third type of financing, which a lot of you really should be interested in, is called equipment sale leaseback. And the reason it's called that is because if you own an equipment free and clear, let's say you own a backhoe, let's say you own an x-ray machine, let's say you own a bulldozer and you own it free and clear. You could then sell the equipment back to a lender. The lender leases you the equipment back. That's why it's called an equipment sale leaseback. But all you need to know is that you could take existing equipment you already have, borrow against that equipment, and get an actual business loan. Okay, that's what's important. So equipment financing and leasing are great options to get new equipment, to buy it, whether you're a startup or you're not. Equipment sale leaseback is a great option if you own existing equipment that you want to borrow against to get an actual physical loan. It's great to use collateral you already have to get financing. Let's look at some specifics. So with equipment financing and sale leaseback, you can get loans up to $20 million to buy equipment, lease equipment, or borrow against equipment you already have. Long loan terms. Some of the longest loan terms you're going to see versus SBA loans, 12 to 48 months. You can get approved with 580 credit scores, maybe even a little lower and higher. Equipment leasing is more stringent with credit score requirements. And again, the rates are all over the board as a result. 5 to 55% rate. Okay, so like I said, all over the board. And now, as I've talked about before, I love when interest rates have really wide ranges, because what that's an indicator of is that they work with all kinds of credit. It means if your credit scores are really low, they'll still help you. You're just going to pay a higher rate. If your credit scores are really low or really high, then they'll give you a much better rate. So I like it when I see interest rate ranges of 5 to 55%, because what that means to me is it means they'll help people that normally can't get help elsewhere, even with credit issues. And again, if you have credit issues and you don't have a good credit repair company, let us know. info@creditsuite.com. We do not do credit repair, but we work with a lot of really good partners that do, and we can get you a recommendation there. So with equipment financing, back to the whiteboard here. You can buy equipment, lease it, borrow against equipment you already have, and as I mentioned, you get approved as a startup. So loans up to $20 million, 12 to 48 month terms, 580 credit score and higher to qualify. Rates are really wide range of rates, okay? And again, you can buy equipment, lease equipment, borrow against equipment you already have, and you can get approved even as a startup. Christine, wish I knew about this when I had to pay off semi-trucks, but great information. As a matter of fact, I don't have that on here, so I'm going to talk about that next, Christine, now that you mentioned that. So a new type of financing, so that gives you an idea of equipment financing. Now, Christine says, I wish I knew this when I had 2 paid off semi-trucks. Well, that actually doesn't usually work for equipment financing because they're vehicles, but we're flirting with a new kind of financing right now that's commercial vehicle financing, where you can either get the financing you basically need or borrow against commercial vehicles you have. Let's say you own an emergency vehicle. Let's say you own an ambulance. Let's say you own a tow truck. Let's say you want to buy semi-trucks. You can borrow against that and get financing for that as well. I don't have that on the whiteboard because it's not a solid product yet. We're testing some sources. We haven't seen the deals close, and until we see deals close in the process all the way through, we don't recommend them. But I will tell you that if you have or want to buy a vehicle, a commercial vehicle, not a Ford pickup, but like an ambulance or a tow truck or a semi-truck, well then let us know, because we have financing that may work. Any of this kind of financing you may be interested in, just go to one of these 2 links. creditsuite.com/get funding, no dash in between, just get funding run together, or creditsuite.com/consult, and we'll talk to you about any of this kind of funding and more that you may qualify for. So commercial vehicle financing, Christine, glad you brought it up, because yes, you can get financing to buy vehicles for commercial vehicles, even borrow against in some cases if you have 18-wheel trucks, if you're looking at big rigs, tow trucks, emergency vehicles, big commercial vehicles. We're even doing one right now for a big ESPN van. Like, it's awesome. It's like got cameras in it and like big satellite dishes on top. It's wicked. So with that, we're doing financing right now. And the guy had a really hard time because the van is so unique that it was hard to get financing against, and we've got some sources looking at it right now. I'll put that on my board when these deals close. It doesn't go onto my board until I know the deals are legit. Nothing to me is legit until these deals actually close. Then when we see track histories with lenders and products, then I can tell you it's a real product. But right now I can at least introduce it and tell you it's something I'm flirting with. We're flirting with because we got a lot in the works. Good. We need the rigs. Christine, let me know. You know, we communicate outside here as well. So let me know. We'll talk a little bit more about that. So financing, somebody already asked about earlier, commercial real estate financing. Well, actually, I'm going to talk to you about house reseller program, which isn't on here as well. Commercial real estate financing, you can get 65% financing up to $20 million with 650 credit scores or higher. Basically, the money you need to borrow against commercial property or to buy commercial property. Now, usually that's considered 4 residential units or more. So if you have a multiplex with 4 units or more, well, then you could typically qualify for commercial financing. If it's less than 4 units, you're usually dealing with a residential mortgage at that point, even if it's a rental property. But there are some sources that will now use good credit in a property as collateral to get financing, but usually it's your primary home. So if you own a few rentals and they're single family homes, probably you need to consider a residential mortgage. You could borrow against those with residential mortgages. If you're in Florida and need a mortgage guy, I've got a buddy of mine that's really good. If you're elsewhere, you could probably find somebody in your local area. If you want to buy commercial property, borrow against it, then we have all kinds of sources. Let us know. We're doing a $2 million deal right now for a guy that had a hard time getting financing in his bank. So whether it's small amounts, 50 grand, or whether it's, 20 million, we can help you with the commercial real estate financing as well. Rates are all over the board, as low as 4 or 5% on commercial financing right now. They usually trail residential rates. Since residential rates are still down, commercial rates are going to be down for a long time because residential rates will come up before we see commercial rates come up. So to borrow against commercial real estate you own or to buy it, that kind of financing exists as well. Now I'm going to go and do a V line here and go to something that's not on my board, which is called Book of Business Financing. And Jermon says 5 or more residential units. And that could be right, Jermon. Actually, it's been a while since I've been in the mortgage space, but I think we have some commercial sources that will even consider it down to 4 units, but I'm not positive. Jermon, you might be right. It might be all sources are at 5%, but I'm pretty sure I've seen some sources that will even dabble with the 4 units or more. But typical mortgages are 5 or more. I think we might have some sources that will do an exception, but Jermon, I appreciate that feedback. So there's also another program called House Reseller Program where you can get the money you need to flip residential property. Here's how it works. You got to have 3 things: 650 plus credit score, experience that's recent flipping properties, 2 or 3 recent within the last couple years of experience flipping, and money in the bank. Let's say like 30 grand you have to have that you can put into an escrow account. If you have this, you can get up to 100% of the financing you need to buy a property and flip it. They will lend you up to 65% of after repaired value. So if you buy the property really cheap, it's possible that you can even get the financing that you need to buy the entire property because they'll give you 65% of whatever the value will be after you do the repairs. So think about this. You can and build your business credit and get credit at places like Costco and Lowe's and Home Depot, etc., like this, with these kind of limits to actually use to fix up the house, and then you use the House Reseller Program to buy the property. So you use House Reseller, you buy the property, and then you use business credit to fix up the property, and you could end up getting this done with little money out of pocket, as long as you have some experience. Now, this is kind of hard money financing. It's usually 8% to 15% rates, 6-month terms typically, but we've seen lenders extend the terms beyond 6 months if your 6 months comes due, but most people don't need that. If you're an experienced house flipper, flipper, you're flipping homes within 6 months' time. You're not usually holding properties for more than 6 months. So house reseller program, you can get up to 65% of after repaired value or 100% of the purchase if it's below that. So if you purchase a property really right, have average credit or higher, have some experience with flipping properties and have some money in the bank, house reseller program is something to consider with residential properties, as well as commercial financing is something to consider with commercial financing. And Christine says, can you help with financing on agricultural business financing as well? There is that financing out there. I've never worked with it before, and I should. I'm from Indiana originally. Like, I should specialize in agricultural financing. But I've never personally worked with it, but I know it's out there. So if you have one of those scenarios, let us know. And again, you could do it. You can go to creditsuite.com/get funding to fill out an application, or creditsuite.com/consult to schedule. And we'll talk about what it is you're looking to do and look into it. Christine, a lot of agricultural equipment falls in the line of equipment financing. So we do those, but I don't know what other things on the agricultural side you might want to do. But we have all different kinds of unique niche type financing that may work. Need a startup loan. The startup loan that's better for you, any of these will work. Talked about so far. Any of these would work as a startup. And if you have good credit or a good credit guarantor, Robert, then that can get you no doc financing up to 150 grand with 0% rates. For that, you've got to have 700 credit score or higher, or a guarantor that does, somebody that wants to be a partner, a family member, a friend, part of your company, anybody that wants to maybe earn a return on the business or earn equity, or any of those type of people would work. This is the best type of financing I've ever found for a startup, because you can get up to 150 grand at 0%. But also remember, if you have a 401k, IRA, stocks or bonds, or a partner that does, or any of these other things, or maybe you want to buy equipment, maybe you own equipment, maybe you own, any of these things would work for you as a startup, as well as the unsecured financing. So the last type of financing we're going to really talk into today is called book of business financing. You could borrow, if you're an insurance agent, you got to be an insurance agent for this. You could use it to even buy an insurance agency. You can get 120% financing against the surrender value of the book of business, which means how much you'd sell it back to the insurance company for if you ever leave the business. Really long loan terms, 3 to 10 year loan terms, 4 to 9% rate is the rate. This book of business and 401k financing are two of the only racehorses. Christine, that's awesome. I don't know if I can help you with buying horses. I'd like to look into that though, Christine. So send me an email. Let me talk to you a little bit more, and I'll put feelers out to see if that's even possible. We like to focus on niche financing that most people don't know about. I'm sure there's financing specifically for horses. I know we can help you with the equipment in the business. The horses, I'm not sure about. I know that's what you do. So connect with me. We'll see if we can get something figured out. So book of business financing, if you're buying an insurance agency, or if you're an insurance agent, you could use your book of business and borrow against that book of business and get financing up to 10 years with only like references is the only thing that you really need. Thanks, Elaine, and you're talking, okay, got you covered. Cool. So that being said, if you are an insurance agent or you're looking to buy an insurance agency, this is so hot because you get really good loan terms. This is one of the only kind of financing. 401k financing and book of business financing are the two biggest types of financing I've seen that people get approved for more money than they end up taking in most cases. The approvals are so high, most people only get a fraction of what they can actually get approved for. Usually it's different. Usually people want more money than they can get. With 401k financing and with book of business financing, most people end up doing the same. They get approved for more than they end up even taking. So, woo! A lot of products today, right? We talked about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I threw in a couple. So we talked about 12 or 13 just kind of of financing, which is pretty cool. So let's kind of do a So remember, if you have cash flow, you can get financing based on that cash flow. If you have 10 grand a month or more, if you have good credit and tax returns, you can also get private money alternative SBA. If you're a startup and you have good credit or somebody else that does around you, you can get $150,000 in 0% financing, no doc. Okay, and if you have any of these type of collateral, 401k, IRA, stocks, bonds, account receivables with business, another business, or with the government, purchase orders, Inventory, a high amount of inventory of $1 million or more. If you want to buy equipment, lease equipment, or borrow against equipment you have. If you want to buy or borrow against commercial real estate. If you want to get financing to flip homes. If you want to use vehicles as financing. If you want to go from if you have book a business as an insurance agent as well, any of those type of things give you the lowest rate financing that exists. Financing that will smoke SBA rates because SBA rates are 5, 6, 7, 8%. This kind of financing is all 1 to 5%. Lowest kind of financing you can get. And remember, everything we talked about today with collateral-based financing, you don't need good credit. You don't need cash flow. It's one of the only type of financing you can get approved for with no credit, no cash flow. And remember, if you don't have cash flow, credit, or collateral, well, that's why we talk about business credit. Because with business credit, you don't need cash flow, credit, or collateral, and you can get these kind of approvals, of which Christine is talking to us. She's on our live stream right now. Here's Christine's running total of about $158,000 in total credit. Her last credit card was a $40,000 Best Buy credit card. You could buy everything at Best Buy with that. So even if you don't have one of the C's, cash flow, credit, or collateral, that's when you really want to focus on business credit to start getting these kind of approvals. And once you do that, then you will be able to get a high business credit score and use that as a basis to start getting you some loans. That's what's cool about these live streams. I've showed you a way to get financing no matter what your situation is. If you have cash flow, great. I showed you how to get fast, easy money. If you have good credit, great. I showed you how to get up to 150 grand at 0%. If you don't have good credit or cash flow and have some kind of collateral, well, great. I just showed you how to get financing with rates lower than 5%. If you don't have anything, cash flow, credit, or collateral, you're not lendable, then we get you business credit, make you lendable, and get you tons of money in the process. Like I said, those approvals from Christine came in about 90 days at $168,000 in real usable credit. So no matter what your scenario is, we've got options for you. So next week, we're going to be talking about a little bit more of X. I'm not going to tell you what X is because I don't know. I don't know what we're talking about next week. I don't know if we're going to stay on financing or jump back to business credit. I will soon figure that out. But I want to thank you for coming. I want to thank you for the conversations, the questions, the engagement. Thank you very much for the shares. That means a lot. Thank you for the likes, the loves, the little cool things shooting across the screen. It's all been awesome. I appreciate it. Great info. We really can't thank you enough. Oliver, thank you very much for coming. It means a lot. I did a lot of these live streams and I had nobody here. It was zero. The whole stream was just zero, and I was lonely. I'm like, this is lonely, but I'm still going to do them anyways because I've learned that if I do it, they will come. And then it's we get 15, 18 on our live stream, and now we see 50, 60, 100. We'll watch this after it's done. As long as I pay Facebook to actually show it to people, which is cool because that's why Facebook has a bunch of money. So anyways, I thank you all very much for coming and joining us today. Now we've went through all 3 C's of lending in depth, and next week we're going to be talking about something awesome, but I'm not sure what awesome it is. I got to figure out if we're going to jump to financing or go back to business credit for a bit. Either way, it's going to be enlightening, and you're going to have a lot of actionable info. So don't forget. Hey, Paul, welcome. You're getting here kind of late. You missed the whole thing. You have to watch it back in the playback. If you want a business loan or business credit, well, if you're looking for a business loan, go to creditsuite.com/get funding. And at creditsuite.com/get funding, you'll fill out an application, talk to our finance team, and get approved. creditsuite.com/consult. Our team will talk to you about business credit and or financing, whatever you'd like to talk about. Those two are your go-to links. I'm going to wrap this up. I want to thank everybody very much for coming today. Christine is going to be live with us on our webinar next Tuesday at 1 o'clock Eastern. So if you're not on the list and haven't got the invite, email us, info@creditsuite.com. I want an invite to that webinar next week on Tuesday. And also add me to Ty's list so I get emails about all the cool stuff he talks about. And we'll get you on our list. We'll get you emails. We'll get you onto Christine's live webinar. It's going to be awesome. So it'll be really cool. I know when my son at the clinic, all right, Paul, well, hopefully everything's okay with your son. And again, to everybody, I appreciate you coming with us. I appreciate you being on these live streams. We're going to map out even more cool stuff in the streams to come. I will see you next Thursday at 11 o'clock Eastern time, where we're going to talk more about business credit, more about business loans. And hopefully I see you on Christine's webinar, where we're going to map out how she got all these approvals, how she got this 158,000 in approvals in 90 days. I'm going to map that whole thing out for you, and we're going to go through how she did it, the steps you can do it too, on our live webinar, which is Tuesday the 17th at 1 o'clock p.m. If you haven't got an email invite already, email us, info@creditsuite.com. I want information on that webinar next week, and please put me on your list to get Ty's cool information, and I'll continue to send you emails on loans, credit, all types of things. So I will look forward to seeing you next Thursday at 11 o'clock. Thanks, everybody. Have a great day.